In this presentation, we will continue on with our partnership comprehensive problem. We're going to be doing the closing entries. We're on closing entry 3 of the 4-step of the 4 closing entries. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Process. So the date will be 1/31 as always with the closing processes. And we're going to go through now. What we've done so far is close out revenue and expenses, move that balance to the income summary. And that's a good check figure because, of course, it tells us that we have 0 balances on all the income statement accounts. And it shows us that the income summary is now net income, which we can see here. And we should also be able to tie to the financial statements that we made with these adjusting entries, meaning if we go back to these financial statement tab and go back to the income statement, we've got the 7,100 here, which is also part of the statement of equity here. And we're really mimicking in many ways the statement of equity in terms of a trial balance process when doing the closing entries. Now we're going to do this part of the trial balance process, closing out, this part, closing them out to the particular capital accounts. We've got the total in the income summary. Now we're going to move them to the capital accounts here and break them out. And to do that, we need to know the 2-3-1 closing ratio to do that. So I'm going to go back to the closing entries tab. And so now this process is more confusing in a partnership than it is for a sole proprietor or a corporation, because even a corporation, which you would think would be more confusing, all you have to do is close this out to one account called retained earnings. And that's because all the owners of a corporation are all like the same. So, you don't need to allocate which owner. But a partnership, the ownership is not all uniform or all the same necessarily. And even if they have a 1/3, 1/3, 1/3 split, they could be drawing out different amounts of money. They could have invested in different amounts of money. So we have to allocate this to the owners, and that's a little bit more confusing. We have to calculate that and track that with individual capital accounts. So that's what we're going to do here. Our goal here is to make this 0, and then to allocate that net income to the capital accounts in accordance with their profit sharing agreement, which should be outlined out in their partnership agreement. So here we go. This is a credit. We're going to do the opposite thing to it, a debit, to make it go down. So we're going to right click and copy. Put that in B16 on the debit side, right click and paste. 1, 2, 3. It's going to go into the capital accounts. So I'm going to highlight all of these like at the same time by clicking the first one, Smith, holding down Control, and then Jones Capital, and then I'm still holding down Control and Brown's Capital and letting go of Control. And so now I have the 3 non-adjacent cells. Now you can copy these one at a time. This is like the fastest way to do it though. So this is like the fastest way. Then we'll put our cursor on the selected area and right click and copy them. And then we'll put that over here in B17, right click and paste 1, 2, 3. Then we just need to indent that, go into the Home tab, Alignment, Increase Indenting. It's probably done for you already. And so again, you could just type them in there or copy and paste them one at a time if you don't like that all-in-one type thing, but thought we would show that here. Okay, so now we're going to close this out. So this has 7,100 in it. Now again, you might be tempted to use a formula, and I'm just going to show you. It's going to have that circle reference problem again, but just to show us, we need a debit here. So you might be tempted to say, why don't I take negative of that number and enter? And we'll do that and see what happens. It's going to be a problem, but just to be familiar and not be scared of that problem or scared of using formulas. So when we see that, we'll say, we'll fix it, whatever. So then the other 3, we got Smith, Jones, and Brown that we need to break out. We're going to break it out with the same ratio, 2-3-1. So remember, we did that on the statement of equity. We'll just do it again here. What that means is 2 + 3 + 1 is 6. So all we're going to do is say Smith gets 2 over the total 6, or 2 over 6, or 33.3333% of net income. And then Jones gets 3 over 6, 3 over 6, or 50% of net income. And then Brown gets 1 over 6, or 16.666 on forever % of net income. So let's do that with a formula here. I'm going to say instead of equals, negative to flip the sign to get a credit of that number. And then this is Smith, who gets 2 over 6. Oops, wait a second. I have to say times. So it's negative C16 times 2 over 6. 2 divided by 6. And enter. And then, okay, note that this should have been Smith, Jones, Brown here. So Smith gets the 2, and then the 3, and then the 1. So if we go back to the financial statements, it should be Smith, Jones, Brown here, or Smith, Jones, Brown gets 2, 3, 1, adds up to 6. Okay, so let's go back out of the closing. So this one's, we put that in there correctly, and then we're going to say this is negative of this number times 3 over 6. And then this one's just going to be negative of this number times 1 over 6. And enter. So that's what we have there. And now these three should add up. This, and this adds up to 7,100 or that. Okay, so that's what we have. Now we'll just post this out. So here's the income summary. We're going to post that first here. It's going to cause us a problem. It's going to cause that circle reference. Let's see why. If we double click on it, go to the end of it and say plus, and then point to that and enter. So there's a circle reference. Why? Because we used that number to get to that number, and then said use that number to change the thing that we just used to get to that number. So if that happens, it's not a big deal. It just means we can't use that. We can't use that formula here. So don't let that worry you about using formulas in the future. Just fix the circle reference if it happens by just hard coding. We have to hard code because I can't use this number. Same thing will happen. So we have to just type this one in there. And there we have it. Okay, so then we're going to post these out to Smith. So here's Smith's capital. Here's Smith's capital. We'll be in the middle. I'm sorry, this is Smith's capital. We're going to be in the middle in H17 equals, point to that 2367, bringing this balance up because we owe Smith more money. You know, the partnership, Smith has more claim to the net assets of the company because of net income going up. And that's what we would expect on the partners. We expect their capital accounts to increase as time passes because hopefully the partnership is earning money. So then we're going to be in H19 equals, and we're going to point to this 3,550, bringing this balance up. And then we're going to go to the Brown's capital account in H21, where we say equals, and point to this 1,183, bringing this account up, putting us back in balance. All right, so now we've brought the income summary down to 0. All income statement accounts and income summary are 0. And the only temporary account we have now are these draws. And that's step 4 to close the draws out to the income summary. Once done, we'll be at the post-closing trial balance where we just have the permanent accounts, all temporary accounts being 0. For more accounting information and accounting courses, visit our website at accountinginstruction.info.